Hello, everyone. Welcome to today's webinar with myself, Fawad Razaqzada, market analyst with Think Markets. And also in the room is my colleague, Victor, who is more of a macro analyst, as you guys know. And he's always got some interesting perspectives about the market. So welcome to the webinar, Victor. And welcome to you guys who have attended today's webinar. Please ask us questions. For those of you who are watching a recording of this, please consider joining us live next time so that you can ask us live questions in the webinar. Now, obviously, this webinar is live, so try to keep your questions relevant to the markets that we are discussing. But at the end of the webinar, we'll have a Q&A session. So if you feel the need to, you can wait until the end of the webinar to ask your questions. Before we begin, please read through the risk warning and disclaimer on the screen. I'm going to help you by reading the first paragraph. These webinars are for general information only and are not intended to provide trading or investment advice or personal recommendations. Any information relating to past performance of an investment does not necessarily guarantee future performance. Think Markets shall not be responsible for any losses you incur, either directly or indirectly, arising from any investment based on any information in this webinar. Please remember that the spread betting and trading CFDs carry significant risks and may not be suitable for all investors. Right, let's jump straight to the charts, and guys, and we'll begin as usual with the dollar index and
with the Dixie.
Dixie.
Well, that's the hot topic right now. The dollar has been rallying strongly over the past couple of months. It has recently paused over the past couple of weeks, and we're about to start wondering how much of the tapering has been priced in. Do we have further to go? What's going on here?
So it's not just the Federal Reserve who has become hawkish. This is why the dollar rally has stalled a little bit. It's not, it's still a bullish trend in my view, but the reason is it hasn't picked up momentum last week. Well, one of the reasons is that we've seen other central banks coming out and saying hawkish things, like the Bank of England, for example. And on top of that, European Central Bank officials have also started to talk about reducing stimulus in elsewhere. In New Zealand, they raised interest rates. The Bank of Canada has become hawkish. So it's all to do with concerns over global inflation, which is something that's been causing bond yields to go up across the board, and not just in the US. This is the 10-year US bond yields. Today they are a little bit weaker, but the trend has been positive. Likewise, in the UK, you can see that yields have broken out, and they're above last year's high, which was
actually, from this perspective, if you look at things, the yield spread between the US and the UK has been compressing because the levels of the UK yield have already surpassed those pre-pandemic lows, whilst in the US, where are we at? How far are we from those levels?
So that was the spread that I put on the chart. This is the US. Actually, in the US, we've surpassed the 2020 high months ago, and we are holding above it. So is that the reference point you were talking about?
Yeah. So can we go back to the spread?
Sure.
Sorry.
This is it. So, okay, this is a longer term chart, 2020. This is it, January. Right. So the height of the pandemic was here. So we haven't quite got there. In terms of the spread,
the spread is compressing, and
in the favor of the pound.
Pound, curiously, hasn't been rallying over this time. How do you explain that?
Well, it's difficult really to pinpoint the exact reason why it hasn't. I think one of the reasons is concerns over
I
Brexit.
have a theory.
I'd love to hear your
Go
theories.
ahead, but yeah.
My understanding is that there's still some concerns about Brexit that's holding the pound back. However, I don't see the pound as being in a bear trend. This is the weekly chart of the pound, and it has barely retraced from the highs. It hasn't even got to the 38.2% Fibonacci retracement yet, which is a shallow retracement in itself. So I see the pound's hesitation as a pause in the underlying upward trend. So the fact that it hasn't really broken down below the 135 on a closing basis, on a sustainable basis, I think is mildly positive for the pound. And in fact, the pound has been doing well against some of the other weaker currencies. But yeah, against the US dollar is because of the fact that both yields in the US and in the UK have been rising. And the fact that the yield spread hasn't reached its pre-pandemic highs is the reason why the pound has not been able to rise more meaningfully. But it has broken this bearish trend line, and as you mentioned, the pound hasn't followed suit. But if the yield spread is anything to go by, I reckon it's likely that the pound might, or the cable, I should say, follow suit and break its own bearish trend line in the weeks to come. But I'd love to hear your theory, Victor. So please enlighten us.
Yeah, sure. So the theory is that the market is betting that a hike in interest rates would be a mistake.
Oh, okay.
And that that's something that has happened in the past a couple of times. Once to the New Zealand dollar, by the way, just before the great financial crisis. I remember how they raised rates to something like, well, something that sounds totally bonkers today. They raised rates to about 6% or something. Wow. So then people started selling off the Kiwi, and they were like, what happened
what that level was.
to yeah,
I'm curious.
It might be 625.
It was here
something
somewhere.
Like that.
It was 8%.
Oh, wait, no, it
8%.
was it was 8%. Yeah.
Wow.
Well, there you go. Memory fails.
Yeah.
So I remember that rate hike back in the
2007.
It really for a time hammered lower the QE because it has proven to be something that the market misinterpreted that from that the central bank has over tightened rates, and there is no way they won't need to dial back those policy rates. So what I'm thinking is going on with the pound here is about the same, that the market is starting to questioning the wisdom of the Bank of England, which has been quite hawkish recently, and they have been signaling that they want to move, and the market is telling them, listen guys, like, yeah, we see where you're going with this, but we don't think that the economy can handle it at this point in time. So if the market is proven right, then a blip higher in the pound could be only temporary.
I see. So what you're saying is that the Bank of England is raising interest rates for the wrong reason, namely inflation, rather than solid economic growth to tame future inflation. In other words, is that what you're trying to?
I don't like to be honest. Like, I don't think that there is much that central banks can do at this time about inflation, because inflation is coming from commodities. And it's coming from supply chain disruptions. So what can the central banks do in order to mitigate those? I have no idea, man.
I think obviously they have a mandate, the Bank of England, and so do other major central banks, to keep inflation at around 2%. Yes, inflation has risen substantially, but if they don't do anything about it, that's the risk, isn't it? That inflation is already
Oh, of
rising,
course, it's
and
a game
by
of
not,
credibility.
yeah, so they might lose exactly credibility if they don't do anything about it. So the market's kind of forcing their hands a little bit here and pushing interest rate expectations higher, which in turn is making monetary policy committee members to kind of talk hawkishly about interest rates and the economy, and prepare the markets for a liftoff. So that's what is holding the pound steady at the moment. And if you look at the pound across the board, you're seeing a bullish picture. I mean, against the US dollar,
very strong.
you're not seeing much strength because of the strength of the US dollar. But if you look at the pound yen, for example, well, the pound yen has actually, the yen has been really weak against all major currencies, and there's a reason for that. In Japan, inflation has been non-existent for the last 10, even 20 years, right? So now that inflation is kind of overshooting across the board, the Bank of Japan is
So
really
they
relaxed
say,
about it. Yeah, so that's why the Japanese yen has weakened, because investors know that the Bank of Japan is not going to do anything about the inflation rising, because they want inflation in their economy. So the yen has been hammered across the board, and the pound is
yeah,
showing very good strength against the Japanese yen at the moment. It has broken out of this consolidation to the upside. So going forward, I don't know if you will ever, well, it might get there to 152.16. That's the base of the breakout. That would be my most important support level to watch. But I don't know if it will get back down to this level. So a more obvious support could be around this range that I'm going to draw on the chart now. If you see any short-term dips into this area, which was previously acting as resistance, we might see it turn into support. So, if you see something like that, then I reckon that would be a decent opportunity to get on the long side. Everything else being obviously considered risk management and so on. But yeah, the area between 152.85 to 153.30 is key support in my view.
right, yeah. The Japanese yen tends to have these implosions from time to time. If you look on a longer term chart, the yen certainly has the tendency to put the market to sleep and then just drop like a rock, meaning that crosses rally.
Yeah, and on the weekly,
we have a very strong level near term, which is the double top around 156.
Yeah.
Assuming that we go through that, I think that we're going to have a very, very abrupt and unstoppable rally for pretty much any currency against the Japanese yen.
Yeah, this looks quite bullish, doesn't it? It spent several weeks, months even, in a tight consolidation range. It's been consolidating since March, and now it's broken out to the upside. That's resuming its long-term bullish trend. And the trend line has held as well on the weekly time frame. So all things considered, this looks bullish. Obviously, the caveat being here that we won't see any major risk-off event in the markets. If that happens, if equity markets sell off, then that could provide at least some short-term support for the Japanese yen, because it's deemed by the market as a safe haven currency. But apart from that, if we don't see risk off, then this thing could really take off from here, judging by the macro backdrop and the technical formation that we are seeing here.
Yeah, and this is something that is a way for Japanese exporters to retain their competitiveness.
Yeah.
Although at this point in time, with energy prices rising, their input costs, generally commodity prices rising,
Mm.
really, their input costs are also going to go through the roof.
Yeah.
So I don't know what the Japanese government is thinking, but maybe they're not thinking about it at all.
Indeed. The dollar yen has broken to the upside as well. Obviously, because the dollar is being a strong currency at the moment, with the Fed um, tapering QE in the next couple of months, looks very likely. Japanese yen, as we mentioned, is a weak currency, so it's taken out its high from last year finally, which was this high here. It all started once it broke this trend line, and since then it came back down, retested the breakout area, and then resumed higher. Now it's reached the Fibonacci extension level at the 161 extension. So there is a potential we may see a pause here. A pause wouldn't be a bad thing, all things considered. If you get a bull flag or something like that here, then you can trade the breakout from that bull flag. Or if you get a return back to the point of origin of the latest breakout, then you could look to get on board on the long side there. So there are two ways you could trade this, depending on what price does. So my favorite would be if we see a period of consolidation here for a few days and a breakout from a from a continuation pattern like a triangle or a bull flag or a similar pattern.
Yeah.
Else a pullback to the support area could also provide a decent long opportunity. I will not consider the short trade until the chart tells me it has stopped out or we see a proper breakdown. So right now, the area that I'm looking at as being the last line of defense for the bulls is at all the way down at 110.83. So if it goes below there, that is the invalidation level for me. So there's room for price to come back down and trap a few bears and whatnot. But as long as it remains above this level now, the path of least resistance would be to the upside, at least on the daily time frame.
Yeah.
Yeah.
So what do you think about the recent developments in commodity currencies?
Commodity dollars have been really strong. I mean, look at the Aussie. It has broken its short-term bearish trend line and it's gone up. The New Zealand dollar has stabilized. Previously, I was expecting a drop from there, which we got, but it didn't really get down to the lows that I was anticipating. So there's a possibility now that the New Zealand dollar.
Yeah, we had a drop after the rate hike, didn't we?
Yes, we did. But this is the chart that will tell you why commodity dollars are doing well. And let me bring it up. I think it's this chart right here. It's taking its time to load. Yeah. So if you what's happening? If you look at the 10-year bond yields, we've got China right at the top. New Zealand dollar, among the major currencies, New Zealand dollar is the one that's breaking out. It's the highest yield on the 10-year at 2.13. Then you have the Aussie dollar, Australian bonds, then the Canadian dollar. So all of these currencies are commodity dollars, right? And they have been going up along with commodity prices. And that's why we're seeing commodity currencies performing well against the US dollar, which is not very far behind. But the likes of the pound, the euro, and especially the yen, they have been weakening because of the fact that the yields in these nations haven't risen as fast or as high as the ones mentioned earlier. So
let's face it, it's not likely that they ever will.
Yeah, exactly. So unless risk sentiment turns sour, there's a good possibility now, in my view, that the New Zealand dollar will break through this resistance area. If it does, then a retest of that could take us all the way up to the 200-day moving average and possibly beyond over time. Yeah, so watch out for that potential breakout. It has to happen first for us to turn bullish on the New Zealand dollar, because we don't like the reaction the market gave us after the rate hike. I want to talk about the Swiss franc before we move on, because the Swiss franc, like the Japanese yen, is a safe haven currency, but more importantly, the central bank is quite dovish still. They don't want to raise interest rates. They think that the Swiss franc is overvalued. So for that reason, if you see yields rise further, especially in the US, we could well see a breakout from this bearish trend line on the weekly time frame on the dollar Swiss. So that's another, we could see a similar move to the dollar yen in this market, is what I'm trying to say. Yeah. And this one hasn't started breaking out yet, but you can see the volatility is tightening, possibly gearing up for a breakout to the upside. Something you may want to keep an eye on. Let's move on to indices. And on the indices front, the markets are responding to the rising yields. This is the S&P 500. It turned lower from resistance provided by this trend line. Support should have held, didn't, around this area. So that level now is going to be potentially resistance for today, because it was the point of origin of the previous breakout. We came back down to retest that level, but we broke below it and fell further overnight. Index futures have now recovered somewhat, retesting the point of origin of the prior breakout. So if this level holds as resistance today, then it's very likely we may see a return to the previous lows. If it breaks and closes above, then I think that would be bullish, at least mildly bullish. NASDAQ is our favorite chart right now because of the rising yields. I forgot to mention, quarterly earnings season is starting this week again. So expect to hear a lot of news from companies, starting with banks. Then next week and the week after, it will be technologies, the technology-focused companies, which means that the NASDAQ will remain in focus for the markets. For now, it's holding its own relatively well. I mean, it has had a rough time previously. Still hasn't completely broken down. So I would still see this and the S&P as consolidation rather than a proper breakdown, because we haven't had any significant downside follow through. The bears had plenty of opportunities, but it could be the start of something major. Who knows? It has broken the long-term bullish trend line on the weekly time frame, as you can see. Whether or not we'll see some real downside follow through remains to be seen. But I would say approach these markets with extra care.
What about gold prices? What has been the trend there?
Well, gold has done okay, and despite the fact that bond yields have rallied across the board. Usually, when yields rise, gold tends to do the opposite. But it looks like the metal has been able to hold its own relatively well so far. That might change.
Do we have a certain inverted head and shoulders pattern on the daily?
Do we? Inverted. Is this the left shoulder? Is this the right? Is that what you're trying to? to highlight?
Yeah,
Yeah,
this is the right shoulder, and the head is basically the low that we had in August,
yeah.
and this is the left shoulder, and yeah.
So this is what Victor is looking at right now, and so far it looks quite positive, doesn't it? I mean, it had a big impulsive move up from the right shoulder area around the 61.8, and then it held its
Yeah.
own above that area for a few days. A couple of days ago, created a bearish-looking candle on the daily, but there was no downside follow-through, or it hasn't been
Yeah,
yet.
that was Friday when
That was Friday, yeah.
we were commenting that any rally could be an opportunity to sell.
Yeah.
The fact the news came out negative, and we did see that spike higher. However, the daily close was super bearish, and there is no follow through yet from that bearish close. So
it's possibly telling us something, isn't
going
it?
on here.
Yeah. When the markets don't react in the way you would expect, normally you would see the opposite reaction. So let's see. I mean, this thing could really take off from here, because it has been coiling for several months now. For a year now, it's been going down. Is it time for gold to shine again? Who knows? We need to see the breakout before turning bullish on gold again. Because right now the fundamentals are not really favoring gold at these prices, with bond yields surging across the board. So yeah, I mean, it could be that investors in precious metals had been expecting bond yields to rise, which is why they had been selling it. But from here onwards, maybe they're expecting central banks not to be as hawkish as the markets or the other markets are expecting them to be in 2022. Let's see. Yeah. And should we look at some cryptos?
Yeah, sure.
Yeah. So Bitcoin has been rallying. It has broken lots of resistance levels, including the area that I had previously highlighted as possible resistance. We did hesitate there for a few days.
We did pause, but briefly.
Yeah. And now it has taken off again, finding support from the high of Sunday's candle. So
now it would appear that there is a lot of reshuffling within the crypto space itself.
Yeah.
Recent days have been quite different in that space, because Bitcoin has been rallying against pretty much every other cryptocurrency.
Yeah.
And it's been making new highs, and in the meantime, like I think you just showed the Bitcoin Ethereum chart, or am I mistaken? No.
No, it wasn't.
No,
it was Ethereum against the dollar.
It wasn't. But yeah.
But I know what you mean. So anything.
Yeah, there is a shift. Well, there is a flight to quality within the crypto space, if we can, paraphrase it this way. The smaller coins are definitely under pressure. They've been selling off for a couple of weeks, and Bitcoin has been rocking solid and attracting more and more dollars. And yeah, something's going on here. I don't know what the market is trying to tell us, but something's definitely up here. That's
absolutely.
There will be some conclusion to this shift.
Yeah. So let's see what happens. I mean, judging by the price action of other cryptos, I would be a bit wary of this breakouts on on Bitcoin. It's still looking strong, I have to say. But if we see any signs of weakness, then that could be a sign of things to come in the days ahead. Right. Do we have any questions? While I wait
at this
for you.
point, but yeah, let's talk about oil and this really relentless rally that is wreaking havoc among consumer pockets all over the globe.
Yeah. So oil continues to defy gravity. I mean, we had a bearish engulfing candle formed here a few days ago. There was absolutely no follow through whatsoever. We did break the low of that here, but then it was quickly rejected at the bullish trend line, and price just jumped, and it hasn't looked back since. It has come off the highs though, so possibly that's a sign that maybe the rally is breakdown with price making lower lows before we turn bearish on oil. Same with UK oil, continuing to move up. The trend is still intact. Prices are getting really expensive, and if you think about shale producers, I think they're going to be coming back very soon if they are not already, because it makes it's profitable for them to produce oil at these levels. And supply of oil should rise in the US in the months to come. Meanwhile, demand is going to weaken, I reckon, because of, there's so many reasons why demand could weaken. One of the biggest reasons is this. If you look at the emerging market currencies like this Indian rupee, for example, it has been falling, right? The dollar has been rising against the Indian rupee. India is one of the largest consumers of oil. With their currency weakening, they're buying, their purchasing power has reduced, has been falling. So that should weigh on demand for oil and other commodities going forward. Likewise, if you look at the Pakistani rupee, for example, the Turkish lira, where are you? Turkish lira has been hitting new record lows against the US dollar. So emerging market demand from emerging markets are going to suffer because of high levels of inflation in those nations, and the currency crisis, or crises, I should say. So I'm not very positive on oil prices at these levels. I haven't been for a while. I did not expect oil prices to go as high as they have done. But if you think about supply and demand, it's only going to, supply is only going to increase from here. While
right, the OPEC is really behind the curve, and they are trying to get back at us, us being non-oil producing nations, for those pandemic lows when these countries have really stretched their budgets, they have missed a lot of oil revenue. So they're manipulating the market higher. That's the only. That's the only thing that I can say. The output has not been in touch with demand. So this is certainly going to raise questions, particularly about US shale oil producers, which are still silent and are still keeping the taps closed. Granted, it's a very intensive, technologically intensive process that turning on a conventional oil and turning on a shale oil field are two very different beasts. However, the resulting sharp increase in inflation and in price pressures across the board is definitely taking a toll on the economy right now. And I think that the least that they want, them being oil producers, is another recession. So yeah, how long can this last? The current status quo? I don't know. I hope not very long, because we really need to get that capacity back online as soon
Yeah,
as possible.
indeed. With those thoughts, let's end this webinar. I can't see any questions from our attendees, so thank you so much for joining us. Please make sure to join us live next time. And if you go to our website, Market Analysis live webinars will take you to this page, and you can register for our coming webinars by clicking on the register button, and just follow the instructions there. And we hope to see you in the next session, which is going to be on the 19th. Which is next Tuesday. See you then. Take care.
Yeah, looking forward to it. Cheers. Bye-bye. Good luck.
Bye-bye.